Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at MarketSite, we have Doug Schwenk. He's the CEO of Digital Asset Research. We're going to cover clean crypto data, of course, and we'll take a look at some trends and discrepancies that we're seeing within the space. Doug, it's great to see you again. Welcome back to MarketSite.
Thanks for having me.
We've spoken a number of times over the years, and I want to kind of look at the comparison with pre-pandemic and some of the issues in crypto assets for institutional investors and where we are right now.
A lot's changed since the last time we talked about pricing pre-pandemic, and we've seen, of course, the rise of DeFi. We've seen Bitcoin go to 65,000 and back down. Lots of institutional interest and coming into the space. We still have a lot to do, and I think the greatest evidence of that is we still don't have a spot ETF in the U.S. yet.
Why do you think we have one?
Well, I think the SEC and the regulators in general look at the quality of the issue, or they look at the quality of the market, they look at the quality of the application. And I think while we've solved a lot of issues that they pointed out early on, whether it was institutional grade custody or some of the accounting issues, we still don't have an applicant who has successfully solved some of the issues that the SEC has pointed out around pricing and market manipulation. And I think what we will see is a high quality applicant at some point who will take the right approach and solve those issues, but in a very unregulated or lightly regulated market, I think it's a little tougher for these applicants to get their arms around the issues.
Taking the other side of that, do we need a Bitcoin ETF if you can access it directly?
I think there are lots of reasons that a product like that would make sense. For example, accessing it directly in an IRA or accessing it directly in a trading account with other securities is a little bit more problematic. We also have tax reporting that's easier if it's wrapped in a security. And I think it just gives people comfort that some of the issues around custody and asset servicing are taken care of by a third party who's reputable and has some maybe some licenses in place and some regulatory oversight, instead of the Wild West of owning it yourself and having your own keys. Good for some people, maybe not for everybody.
Right, well, that's a great point that you bring up. What are the main use cases when institutional investors, when they think about pricing specific to crypto?
So certainly there's the trading and execution, you want to buy or you want to sell, but when we think about valuing a portfolio, understanding what the net asset value of your broad portfolio is, you want a robust and reliable price that's like a reference or a benchmark. We think about swaps and derivatives having prices that are benchmarks that they can trade against, so we understand exactly what the price should be, and especially when there are hundreds of exchanges out there that are trading these assets, no one single source of truth, it's important that these prices and their uses be slightly different than what we might see in traditional markets.
Why is it so hard to get accurate pricing with cryptocurrency?
Lightly regulated exchanges, lots of exchanges. It's not like you can go to Nasdaq and get the one price for Bitcoin, because it trades on so many different markets. And some of those markets are unregulated. Some of them historically have engaged in practices that we would call fraudulent, whether it's wash trading or whether it's outright faking transactions to generate volume. The barriers to entry are very low, and we see that the market moves around these exchanges, sometimes by geography, as folks in Japan wake up and start trading. Of course, markets move more locally to them, and through Europe and the US. And so it's hard to know what the source of truth is unless you are like really looking carefully at the quality of price that these exchanges are producing, what they're doing to prevent manipulation, and whether they have the right sorts of controls in place to know that what they do is reliable.
It almost seems counterintuitive when you think about the fraud that you had just spoken about, where you're trying to evangelize the use cases for crypto and how it creates access to everyone on a 24/7 basis. But then when you don't allow that to play out in a well-structured way, it almost kind of mitigates all the work that the industry is doing.
Well, I think it's like any sort of new market. You think back to the internet in the 90s and of course, many other innovations we've had, smartphones, et cetera. You see some, good behavior and some bad behavior that happen side by side. Maturity takes time, it takes focus, it takes rigor, and we're gonna see some things that we don't wanna have in the market in the long run as part of the short run exercise, as we see the Bitcoin and other cryptocurrencies, reach the potential they have, whether that's, servicing unbanked or being truly decentralized or all this sorts of promise that they hold. doesn't mean that we won't get there. It just means we may have a few bumps along the way that we've got to solve.
Right. Well, I mean, it's a great point. I mean, the silver lining to that is you're going to build the structure around it to make it compliant in all the ways that we want to see it compliant. How does digital asset research, how do you find accurate prices?
Well, we go through a really rigorous process that we've been doing for now about 5 years and have really continued to raise the bar on that process, looking at all the exchanges we can find globally. Do they have sufficient liquidity, reported or supposed liquidity? And then we look at that trade and order book data for any signs of data manipulation, market manipulation. If we can't find any signs of that, then we do a deep dive in a traditional diligence sense. What's their trade surveillance systems? What's their management team? What are their policies and procedures? What's their business continuity? And we really try to understand, is this business being run in a way that we would expect a regulated institution to be run? Are they mature or are they immature, or are they a bad actor, or something else? And we try to weed out from that landscape those that are either immature or bad actors, or ones we can't just figure out what they are, and pull to the top those that we can fully vet. Some we put on a watch list, and then we'll pull the prices from those exchanges. And I think that gives us confidence that those prices are real economic activity, real buyer, real seller, and therefore we can have confidence that that's the right price in the market for that particular asset.
And that's what you mean when you talk about clean crypto data.
Cleaning out the noise.
Yeah. All right, Doug, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.